Hi, everybody. This is Alan Ellman, the Blue Collar Investor, and I'm creating this video to let you know about a webinar presentation that I will be hosting on Tuesday, March 23rd, 2021 at the Trade Thirsty Westmark Trading webinar event. Now, Barry Bergman, the BCI Managing Director, will also be available to answer your written questions as I go through the information in the PowerPoint. The title of this webinar is using both covered call writing and selling cash secured puts to generate monthly cash flow and to buy stocks at a discount. In the BCI community, we refer to this as the PCP or put call put strategy. Outside the BCI community, it is frequently referenced as the wheel strategy. Now, covered call writing and selling cash secured puts are two of the lowest risk option selling strategies available to us. When we combine them into one multi-tiered option selling strategy, we now have an extremely low risk strategy that will generate significant annualized returns while keeping that low risk framework in mind. We're going to start the webinar off by going through the three required skills for successful option selling. Those are stock or exchange traded fund selection, which securities are the best ones to use for our option selling. And this goes through fundamental analysis, sales and earnings growth, technical analysis, reading a price chart, specifically for trend and momentum and compared to volume. And we go through some common sense principles like minimum trading volume, avoiding earnings reports, asset allocation, and more. The second required skills is option selection. What expiration date are we going to choose? What strike price are we going to choose? This is something that will be incorporated within our webinar. And finally, the third required skill is position management or exit strategies after we enter our trades. How do we manage these positions? So those are the three required skills that will be highlighted in the webinar. Now we'll do some hypothetical preview examples for both covered call writing and selling cash secured puts. And then we're going to show you something that I believe will be of interest to many of you, and that's how to use put options to buy a stock at a discount instead of using limit orders. Now, when we use this strategy, there are only two possible outcomes. Either we will buy the shares at a discounted target price, or we get paid not to buy the shares. Those are the two possibilities. Now, the one caveat is we have to be willing to accept the shares in 100 share increments, because for every one options contract, there are 100 shares of the underlying security. We'll go through strategy goals, which is to generate monthly cash flow. We understand there's the possibility of assignment. And if those shares are in fact assigned or sold to us, we can then write or sell covered calls to continue the cash flow. Now, if those options are exercised and our shares are sold at the price we agreed to sell them for, now we have the cash to then secure another put, and so on it goes. And this is a graphic of how the strategy works. You'll see on the top left, we start by selling out of the money cash secured puts. If that's exercised, we then buy the stock at a discount, and we can then write a covered call. If those options are exercised, then we have the cash from the sale of the shares to then secure another put. So every contract either generating cash flow or buying shares at a discount. Now, remember, I'm not saying there's no risk with this strategy. What I am saying, if we master the three required skills, it's very low risk. We'll also be showing you a real life example. In this case, T-Mobile US. We'll go to an option chain like you see on the screenshot. We'll then put that information into a spreadsheet to show the calculations for both the put leg of the trade and then the call leg of the trade. We're going to show you how if you combine these two strategies, into one multi-tiered option selling strategy, the humongous amount of downside protection this strategy will afford us while we're generating this cash flow. And we'll show you that in a spreadsheet format. At the very end, we'll summarize the presentation, which goes through the point of generating monthly cash flow, how we could sell cash secured puts, and then if exercised, then write a covered call, and if exercised, then continue to sell the cash secured puts, as you could see once again in this graphic, which we'll be showing as well at the webinar presentation. So there you have it, ladies and gentlemen. There's a lot of information that I'll present to you at this Trade Thirsty Westmark Trading webinar event on Tuesday, March 23rd at 12 p.m. Eastern Time. I hope you can make it. And my hope also is that not only will you enjoy this webinar presentation, but that you will also benefit from it financially. So I hope to see you there. As always, this is Alan Ellman, the Blue Collar Investor. Take care, everybody.